Good afternoon, traders. This is Tony D from the easyMarkets dealing room with an important update today. We've had some interesting moves overnight. We've broken out to the top side in the US dollar, fresh highs for the year on the dollar index, and this has been driven mainly by a reversal in the euro. You've seen the euro pull back towards that 115 level. It goes as low as 115.15 so far. If we do break below it, then the day lows, the yearly lows here are down at 115.10. And that could be the start of a US dollar trend. If you get a reversal today, then the range traders will start to make their play known. The market looks like it was just a little consolidation at the upper range that was confusing traders at the start of this week, and throughout the week it's been a very choppy trade. It looked like the US dollar was reversing, and then finally it didn't. It went to the day highs. Now this has had the effect of the the Aussie dollar breaking back from a very nice high. This is a bearish intraday, so we got to 74.50, then back down to 73.70. That's about as bearish a candle as you can get, making a new high then a new low, and closing at the lows. It is technically a bad sign here. It can be saved by just the US dollar in general, because this is a US dollar related trade, but ratcheting up tensions. Perhaps the market has finally had enough of this range trading. We'll be able to push one way or the other. The low end of this is 73.20. If we get below that, then similar to the euro, you're on the way down. Now you don't need any excuse to sell the pound without a Brexit deal. The leave side is well, the no Brexit deal chances are increasing every day that they don't make a deal. They are on holidays at the moment. I suppose there's a reason for the quietness, but the bears have filled that void with negativity, and you're seeing the market getting sold aggressively on most rallies. Now this rally here last night was caused by talk that there was going to be a negotiation from the EU side, a little bit of an easing of their policy regarding the customs union. Look, even their customs union easing, it was sort of looked at and thought that perhaps this is not enough because the UK side won't accept it. So this is not just what is palatable for May and her Conservatives, and her trying to get a deal together that her own population can confidently agree to, but also what the EU is going to agree to. Likewise, what the EU is trying to get from the UK is some sort of trading commitment from them, but either money in regards to access to the or some sort of equivalence in their trading rules as well. They don't really want to give too much power to the UK. Don't want to encourage any other countries to think about leaving as well. So there's a little bit of reasoning behind them being so harsh, but at the moment it's we haven't got too many of the officials making headlines. It's just so much the analysts and speculating on what's going to happen next, and that's where the negativity comes from. There's so much uncertainty, the pound just can't get a bid, and it's very hard, and in rallies are getting sold like that. So you really need to see something concrete here. We do have some data coming out from the UK though, which is going to be the GDP numbers. Perhaps a stronger GDP number will help. A weaker number definitely wouldn't, but at this point it's not really economics anyway that's pushing this market up and down. It's much more the Brexit negotiations. If you're talking about forecasts of what happens if there's no deal, up to 1.10 is on the cards. If you're talking about what happens if there is a deal, then 145. So you've got a huge change likely to happen in the next 12 months, and this is getting to the end game in negotiations as well. In terms of the dollar in data tonight, you do have the CPI numbers. CPI does come out month on month. It very rarely has a huge miss or gain, but slightly stronger would definitely help the dollar. It is the most important component probably that the Fed's looking at right now, with wages being with jobs being very strong. It is all up to the inflation data, and if we start to see higher inflation, then that can change the outlook for how many times the Fed's raising in the coming years and months. Alright guys, if you want to have a chat about some of the crosses, because although we're seeing a lot of movement here on the US dollar, you got a lot of play in the crosses as well. Come through on the line below. If you're not a member of the easyMarkets dealing room, then you can join up with the link below. Get a dealer like myself to assist you with your trading, try to help you with the risk management as well as strategies to attack the market each night.